Okay, guys, in this one, we are going to talk about how to fight the FOMO and greed as you are beginning to master your natural consistency for your specific trading strategy. As you have been following along with our series, talking about investing for beginners, diving deeper and deeper on how to understand earnings, when to buy and sell, how to read the candlesticks, overall, knowing if you are a long term swing trader or day trader on top of combining your fundamentals and technical analysis with understanding your volume and putting all of this together to catch those next big breakouts. If you continue to use these skills to put together your weekly watch list, then you will be able to find yourself continuously fighting the FOMO and greed because you have a natural consistency putting together all the skills that we have covered in the last previous lessons. We'll recap a few of those here as we come across positions where you may face FOMO and greed on your specific chart trading strategies for long term investors, swing traders, and day traders. Let's get into it now. We'll look into our most active list, just clicking on a random stock. Okay, I'll scroll down some and click on a random stock this time. Let's look at this one right here. Okay, this is open. This one has an average volume, if you guys remember, average volume of 37 million and a current volume of 63 million. Big volume and a massive free flow of 639 million. In this stock here, we will get people who fight the FOMO and greed very often in this stock, as this stock comes in for very wide swings. We're looking at our swing trade time frame, our 4 hour chart, as you can see, from oversold to overbought for many a time. On our 15-minute charts for quicker day traders and whatnot, as you can see, all throughout the days. Hot spikes all throughout the days. On your 1 minute chart for the super fast traders, they make a hot moves in there all throughout the days. And we'll compare these to some other stocks as well. And you can see this stock on your bigger time frames for you weeklies and longer term investors at the bottom. So let's begin analyzing this out right now on our monthly. If you've seen our very last video on how to build a weekly watch list, and our previous video on how to check out for breakouts and avoid false signals, you'll understand different positioning on different RSIs and MACDs along with your value. Okay, so we're looking here on a monthly chart here for you long-term investors using all of those skills that we talked about in the last lessons. And here, longer-term investors will start to begin to get the FOMO because it's at the bottom. They get the fear of missing out. They wouldn't face the greed here because it's not out of position where they will feel like they need to be greedy because it's still at the bottom for their long-term investment time frame. But if you hone in on that for those weekly chart traders, it starts to uptrend a bit more. Some of them get a bit nervous and want to lock in gains early. From this point right here is where longer-term investors decide if they are brave enough to hold in, and at that point there, if they are already past their specific targets, because remember, you got your specific targets and exit strategies, and we'll talk more about those in the next lesson. Okay, so you can understand where yours should be for your specific chart trading time frame or go. And if you go in from your weekly chart to your daily chart, you'll be able to see how this is coming overbought. Now, oversold at 152 down here, where the RSI is oversold, your MACD is making bullish divergence, if you guys remember. We will get the FOMO. We have the fear of missing out. Some people will get the fear of missing out a little bit too early and they will want to buy in too early. Notice how your RSI is not all the way oversold, not making clear bullish divergence. They're pretty choppy in there. You want to wait till you see it get down to its most low and oversold position, and then wait till you see clear bullish divergence being made. When you get in there, and now we can see this thing becoming overbought, they then made some great gains in there from 152 up to 248. In fact, for those of you who are seeing this, we can even go see exactly how many percents they would have gained off of there just so you have a better idea of what type of range that would have been. And going from 152 up to that 248 would have been about a good 45% range. So let's go back to the Webull so you don't get confused on charts. Let's say that was a 45% range, right? So let's say that they went up about 20, they had a 20% target. Remember our target ranges in our last how to read candlesticks video, showing you, and it's on a daily chart, a target one, a target two, the target three. Why these targets? Because you can see the last drop points. Target one, target two, target three, and then a target four. We're looking for it to break out over the target 4 before it hits our overall profit 5. Up there is about 50% target. So about 15%. Let's say that they hit a 15% target and they're looking for this thing to continue to go up. Yes, it's breaking out over the course of days. And these are daily chart traders. Once it gets to the top, they know it's overbought. Now that it's overbought and dangerous, and they know that they're up about 50%, and they knew they were supposed to lock in gains around 15-20%, they're fighting the greed. They're being in a greedy position because they know it's about to start selling off because it's overbought and dangerous, and they know they have bearish divergence coming in. Those of them who didn't sell out, now they are either confident in this thing to continue to come in for longer term time frames, or they fought the greed on their specific daily chart and 4-hour chart trading time frames where it became overbought and they knew they were supposed to lock in gains. You face the greed when you are trying to push it past the position that you know you are naturally supposed to lock in gains at, or where your exit strategy is pushing it to. In this case, people who are up 50% were being greedy instead of sticking their strategy and locking in gains like the rest of the people who had their target. That is that point where it became overbought. That is from oversold, of course. Let's hone in on that chart 15-minute chart, where people on the 15-minute chart would have probably been getting the FOMO all in yesterday. So I saw choppy in there, especially towards the pre-market. Going for his next round of bullish divergence, it uptrends to overbought. Once he gets up to those highs, those people up there are facing the greed. They never supposed to lock his gains. And you can notice how there's some red candlesticks in between and whatnot. Because a lot of people are saying, okay, I'm just going to settle here. You got to lock in gains and settle somewhere when you get nervous. They all face the greed, and those people who are being too greedy lost out on their gains rather than locking it in before it made its next round of the bearish divergence and sold back off. Some people would get the FOMO and they will want to buy back in at the bottom. On our 15-minute chart, 15-minute charts are very good for your overnight swing, as you can see, as it swings into the overnight for the last couple of days. Getting ready to do it again here. People face the FOMO because they seen what happened last time. But so, oh man, I don't want to miss out on this. It bounced back off support, exactly where it bounced up from last time. If you guys remember our target ranges and whatnot that we spoke of last time, and you have your next target ranges. Let's hone in on that so I'll be able to show you a little bit more about that. Your target range 1, we're stopping here now. Range 2, about 228. Range 3, about that 232. And the max range 4, about 235. Maybe it breaks past that like it did last time before it had this big pullback. And it'll struggle at that point, exactly where it bounced up from the previous time. You see? Exactly where if you go down to a 4-hour chart, it dropped down from the last previous time. Let me zoom in some for those of you who don't see. Do you see? These are big resistance points to face on the stock for your 4-hour chart traders. And then you hone on that for your 15-minute charts. 15-minute chart traders are looking for closer support and resistance points, as 4-hour chart traders are looking for further ones. You fight the FOMO when it's about time to get in, and you're nervous if you should buy or you don't want to miss out. You make sure you're watching out for your RSI and MACD to make the next round of the bullish divergence. Now, when it becomes overbought, you know your last big resistance point where it keeps doing battle at and selling back off at. You're being greedy up there. It's overbought on each time. I'll zoom out some even. So overbought each time. You have your target ranges when it becomes overbought and fight the greed there. Not to overwhelm you with too much information. We'll talk more about these in the next lesson. We'll probably be speaking of I just talked about what we're just gonna be speaking of. I don't know what's gonna be next. I'll figure it out. But that's coming up soon. I'll see y'all in there end. Happy trading.